New rules on taxing crypto assets come into play from the 1st of April, and the impact is already being seen on investors in crypto assets. Now, over the last year or so, the craze for cryptos has increased many-fold, but the announcements in the last budget, which saw a taxation on crypto assets at 30% with no offset against losses, seems to have already had a chilling effect. What will the industry have to do to really survive post 1st April? That now is the big question. But before that, let me go across to my colleague Kritika Arora, who has this report on what really is happening with investors before the 1st April deadline. Take a look.
The volume of transactions by crypto investors are expected to drop significantly, probably to the tune of 50% or even more from April 1 once the new taxation norms come into force. And this is according to crypto exchange owners. So crypto investors will now have to pay 30% flat 30% tax on the income from transfer of virtual digital assets, 1% TDX on every transaction, and in fact they will not be allowed to set off gains and losses from one virtual digital asset against the another. So crypto exchange owners said that this is going to be detrimental to investors, and even now they feel that transactions are going to reduce significantly once these taxation norms come into force, because investors might want to avoid paying TDS on every transaction, and once the volumes reduce there will be lesser liquidity, and this will also hamper the price discovery process on the exchanges. Even at this point of time, some exchange owners say that they have been seeing more of selling activity by crypto investors, and probably that could be because of tax harvesting before the end of this financial year. But they are also saying that given the market sentiment going strong at this point of time in crypto industry, they are seeing lesser sign-ups as compared to what they would have seen in usual.
To speak more on this, I'm joined now by Ajeet Khurana, Bitcoin expert and founder Genezis Network. Sarmad, Nazki, Chief Financial Officer of CoinSwitch, is joining us on the show. And I'm also speaking with Rohinton Sidhwa, partner at Deloitte India. Welcome to all of you, and thank you so much for speaking with us today. Mr. Nazki, let me begin with your take. Can you give us a sense of the kind of flight of investors you've seen perhaps in the last couple of weeks, since it became clear that there is no respite from this 30% tax, no offset against losses either? Are you seeing that impact on the kind of enthusiasm among investors?
Sure. So, Ramana, I feel it's a little early to see a drastic impact, right? But if you look at, there were three key things that came out of the tax regulation, right? One was the 30% tax, second was no offset available, and third was the TDS, which becomes effective 1st of July of 2022, right? We feel the most substantial, which will have an impact, right? From recurring volumes will be the TDS one, because like any other market, right, there are significant portion of small traders who do very high frequency trades, right, and very low margin. And 1% TDS is definitely going to eat up a lot into their liquidity. So once that clause comes into play in 1st July, that will have a significant impact. I think on the others, consumers, there is some amount of negative sentiment on 30% tax being higher, and they feel like it's punitive. But in terms of the offset and the TDS, I would categorize it to be third. The other key impact which is there because of no offset being available will be that people will typically take less bets on new projects, right? Because essentially new projects are unknowns, right? And investors assume that they will make decent profits at a portfolio level. By disallowing those losses for tax calculation, it definitely makes overall returns less attractive for them.
No, but Mr. Nazki, I'm assuming you've already seen some impact. I mean, it's no news to anyone that there's going to be a 30% tax from 1st of April. Are you seeing the impact of that coming in since the budget in terms of the volumes of trade or the number of new accounts or the kind of investments coming in per account? Any kind of detail that you can share with us?
There has been slight slowdown, right? So there are a lot of people who are now on the fence, right, trying to watch how this will pan out. But I would say not a very significant impact as of today. I think some of these things take slightly longer for the impact to come in, because how it impacts you is two ways, right? One is lesser number of people come into the industry, which impacts your growth, right? Because you're still making profits, but you have to pay higher taxes. The second thing is your overall returns, right, may not be as attractive to other asset classes as they were before, right? So you would see some bit of reclassification of portfolios and money moving to other asset classes, which I think will more be able to see in the next 5-6 months. There's been impact, but not a very significant now as of today.
Rohinton, I just want to understand the tax implications. I mean, we're speaking on the 31st of March. For investors, does it make sense to exit their positions if they're sitting on profits today, wait for a few days, and how do they wrap their heads around this 30% tax and the impact it's going to have?
So the position has always been that this is income which is taxable in India if you're an Indian resident, and consequently, the fact that there is now clear-cut guidance in the Income Tax Act as to how it will be taxed didn't stop you from offering it for tax in the first place. What did not exist prior to 1st April was a framework. But the position that has generally been advised is that, well, if you are an Indian resident and you had any income from any source, typically that's something that gets swept into the definition of income for the purposes of taxation. The rule change is merely codifying what was perhaps not very explicit. The thing that is a bit of a surprise is the fact that no deductions allowed for loss and set off. The fact that the rate of tax is so high, it's definitely supposed to be a punitive rate. And most important, and I think this is something that, as was pointed out earlier, will significantly impact traders is going to be the TDS, because that will sap out the liquidity from a trading operation. So this is going to be significantly impacting those people who are into regular trading of cryptos.
Yeah. So, Ajeet Khurana, we've spoken earlier about the kind of chilling effect this new taxation will inevitably have. How are investors and how is the industry responding? I mean, one hears of some people trying to move to private wallets or look at foreign exchanges, foreign crypto exchanges, which will also attract GST. Are people looking for a way out, or they're saying, let's just forget about our investments for now or cash out while we can? What is the kind of trend that you're seeing?
Three trends that I'm seeing. Number one is that, like you asked Rohinton, are people booking profits today being 31st March? Actually, it's exactly the opposite. People are trying to book losses today, because the belief is that while there is clarity of what happens beginning tomorrow, today you may still be able to set off your losses against your profits. And today, that is this financial year, you may be able to still carry forward your losses to the next financial year. That is one of the beliefs that people have, that is changing tomorrow, but it can still be done today. Number two, what I'm seeing is exactly what you said, that there is a belief that the TDS part specifically, not the tax part, because that is clear, like Rohinton said, you sweep it into income and it's all taxable at whatever is the applicable rate. But the TDS which erodes into or eats into your capital at every transfer, please understand, the word sale has been replaced with transfer in this finance bill. But what a lot of people believe is that if you do it on a peer-to-peer level, on your private wallet level, on a decentralized level or international level, then somehow the incidence of TDS magically disappears. My understanding is that this is an incorrect interpretation, but I hear this a lot in the industry. And one very quick point, Tamanna, you and I talked on the 21st of March, when I had said that people's interpretation that the losses cannot be set off against profit, as the Minister of State for Finance's interpretation itself could have been wrong based on the finance bill. On 23rd of March, the finance minister, Nirmala Sitharaman, actually removed a word called other provisions, and actually probably she heard of our program because she removed the doubt and made it clear that you cannot set off losses.
Yeah. The question now, Ajeet, is, and I like the way you use the word, people are hoping this TDS problem will magically go away. I'm going to ask you the broad question. Do you think the industry will survive this new taxation regime and the TDS regime, which to my understanding will be calculated from April 1st, but will kick in fully from July 1st? I'm going to ask Rohinton about that. But do you think that the industry and the kind of boom and growth it was seeing will survive this? I mean, you had crypto exchanges become unicorns. You had huge amounts of money coming in. Will all of that now see a massive slowdown?
With the caveat that crypto exchanges represent only a small fraction of the crypto industry. But now I'm responding on behalf of crypto exchanges, not for the full industry, which has many other parts, not just exchanges. I think that we are in for a very bad time. To be honest, I think that this can be, whether they'll survive, live, die, that is a little, as in I can't make that exact judgment. But I think that if these provisions remain as they are, the blow will be very severe.
Rohinton, just some clarity on your side on how exactly and when from this TDS will be calculated. Is it going to kick in only from July 1st or on transactions post July 1st, or will it be payable post July 1st and kicks in on transactions from April 1st? How have you interpreted it?
So I'd just like to clarify something that was said a little earlier with regard to private wallets versus legacy and established players. The TDS provisions are based on the ability of the government to regulate a particular person who is responsible to pay an income to a person on whose income the TDS is supposed to be levied. Now, clearly, the government has certain extraterritorial rights when it comes to income which is taxable in India. But the ability to actually implement some of these proposals is in doubt, especially where you have a foreign player responsible for actually administering the TDS. So this is something that's going to play out in the in the longer term. What will definitely happen is that the large players who definitely have a stake in the game in terms of having a large pool of investors in India, they would want to comply because that jeopardizes the existing client base that they cater to. And consequently, they would always try their best to ensure that they comply with the rules of the land. But private wallets are very difficult to comply, and making laws that are applicable only to a set of players and not being able to enforce them for the rest of players can mean some sort of inequity in the way the law is actually enforced. So that's something that's going to play out as it comes. With regard to the enforcement, yes, the thing is going to be effective July, but yes, as you know, the provisions of the finance bill are always effective from 1st of April. So any TDS that needs to be done will have to be made good.
Okay, so just to clarify, any transactions post 1st April, will attract TDS. You have to pay it in July. Very simply put. Is that
right.
Correct, Rohinton?
That's right. So its impact is right. From the 1st of June. So you take some time to be able, under law, there is a provision to allow you some time to make the payments to the credit of the government.
Okay. Sarmad, I want you to respond to a point Ajeet Khurana made, that there are some very tough times ahead for the ecosystem and especially for crypto exchanges. It's going to have a severe impact because really, where is the incentive anymore to go into something that is still largely perceived as risky, where you can't offset your losses, you have to pay additional TDS, etc. How are you preparing for that?
So, Tamanna, unfortunately, the industry in India at least has seen worse times, right? Since 2018, when the RBI ban came, and I think we are used to fighting these things out, battle tested that way, right? There will be some setbacks in the short term, right? But in the long run, I'm very confident that we'll find ways around it and we'll work with the government closely. I think, there are lots of aspects to this, right? Although TDS is applicable from 1st of July, right? But to be honest, in my view, I don't think any of those provisions today are practically implementable, right? For example, today the onus of payment of deduction of TDS is on the buyer, right? But typically in an exchange, the buyer never knows who the seller is, right? So there is no way he can't do, there's no clarity. There is TDS also on crypto to crypto swaps, for example, right? But there is no clarity on how to value it and how do you actually convert that transaction to, let's say, an INR, unless government of India starts accepting TDS in Bitcoins and Ethereums. I don't know how that's going to be implementable, right? So there are a lot of these practical challenges in that which you really don't know, right? Because see, typically, right, normally in any buy or sell transaction, you talk about how you identify a seller is because there is fiat on the other side of the transaction, right? If I am paying you 100 rupees to buy something, you know who the buyer and seller is. But in a crypto to crypto transaction, it's very difficult to say who is buying and who is selling. So there are a ton of these clarities that the government needs to come up with. The industry has been seeking these clarifications for some amount of time. We hope we'll get them very soon. But as of today, I think there's a lot of work to be done on the clarity side of it. And I think on your other piece of impact, right, there'll be some short-term impact, but we hope that we'll work with the government and going by first principles, right? And they'll be able to figure out some better way to help address the industry concerns and help it thrive.
You know, I like that never say die spirit. And you're right, 2017, when that first RBI circular came out, 2018 was literally the death knell for the industry, right? No banks were allowed to facilitate any transactions, and you guys fought it back. So clearly there's a lot of faith there. But I want Rohinton to come in on some of the clarity and points of clarification that you spoke about. Rohinton, can you just shed some light on this, especially in transactions from crypto to crypto and the identification of buyer and seller? Do you think that there is scope for more clarification here as far as the government is concerned?
Yes, definitely. You think about how this tax has been structured. It's meant to collect some tax in advance against the prospective income of a seller. Now, typically on transactions on an exchange, it's very difficult to figure out who is the buyer and seller unless there's a one-to-one mapping with regard to the transaction. Perhaps a better option that the government might have had considered may have been something on the lines of the securities transaction tax, which currently prevails with regard to security trades that happen on India's stock markets. But again, over there, the requirement, while it emanates from a trade on a stock exchange, it devolves upon the a stockbroker or a broker in between who actually does the calculation of the tax as well as the payment of the tax. So maybe perhaps if the government's objective were to A, collect some money, B, to ensure that these transactions come into their reckoning, then perhaps the security transaction tax could have been a via media. Now, obviously, the securities transaction tax is not a proxy, perhaps, for an income tax because it's unfair to tax a person who's making a loss as well as at the same level who's making a profit on a particular transaction. And that determination can perhaps be done when the person only files his tax return. But at least the STT sorts out the immediate problem that today's cryptos exchanges have in being able to identify the buyer seller in computing the tax, in ensuring that there is equity in the system when the tax is calculated.
Just on the policy level, Ajeet, let me come to you as we round off this discussion. What are you seeing as the intent of the government? I mean, there's no clear response on whether this industry and virtual digital assets per se in the private space are going to be encouraged or not in terms of a policy framework. But from the direction of announcements so far, does it seem like as of now the government's not really interested in letting this space flourish, where investors were completely enamored by new coins and the kind of returns that you can get? They want to put a lid on that and maybe succeeding here.
What I'm going to do is I'm going to respond to your question based on a lot of private conversations I have had, and I'm not necessarily responding to what is commonly known in the media. So to that extent, everybody, buyer beware, it is speculative. Number one, My feeling is that there is no such thing as government. There are various agencies, departments, institutions in the government, and many of them have a differing view. For example, I think that the most aggressively anti-crypto voices are coming from the Reserve Bank of India, not from the Ministry of Finance. So I think that there is a balancing act being played there. The second thing I am finding is that the government seems to have completely and, in my opinion, irreversibly made up their mind that those words like banning have to disappear, at least for all official purposes. Yet at the same time, the government is feeling very uncomfortable as seeing to be encouraging this paradigm. So that is where a lot of these tax provisions and the fixed rate and the flat rate, no loss of check, etc., is coming up. My irresponsible prediction, I say irresponsible only because I'm trying to predict the future, is that the tax situation, the details and implementation is going to get smoothened out. And I would even predict that this would happen in less than 1 year.
All right, let's see what holds for us as far as the space is concerned. Today is definitely a tough time, and we'll have to sort of gauge the response after the first few months of this new tax regime coming into play. Thank you so much, gentlemen, for joining us on the discussion this evening on the India Development Debate.